This video is brought to you by Answerly, a question platform that pays you for adding high-quality answers on different questions. The users are rewarded in Answerly tokens, which they can easily convert into dollars or any other cryptocurrency by using one of the exchanges mentioned in the description. Interest in the cryptocurrency markets came roaring back this fall, with Bitcoin and Ether both breaking their previous all-time highs just weeks ago. However, shortly after the breakout, things turned south and the market took nearly a 25% dip. While many investors and traders were calling for an end to the bull market, the stablecoin printer continued to pump new capital into every corner of crypto. Several billion-dollar funds were announced and institutional investors were taking part, arguably for the first time in the short history of the asset class. Hello and welcome to our YouTube channel. In today's video, we'll be talking about the one-time buy opportunity you can't miss on Ethereum. Ethereum slid by 6.59% on December 3, 2021. Following a 1.58% loss on December 3, Ethereum ended the day at $4,217. After a mixed morning, Ethereum rose to an early afternoon intraday high $4,663 before hitting reverse. Ethereum broke through the first major resistance level at $4,623 before sliding to a late intraday low $4,036. The extended sell-off saw Ethereum fall through the day's major support levels. Steering clear of sub-$4,000 levels, however, Ethereum's broke back through the third major resistance level at $4,124 to end the day at $4,200 levels. At the time of writing, Ethereum was down by 0.35% to $4,202. A mixed start to the day saw Ethereum rise to an early morning high $4,240 before falling to a low $4,193. Ethereum left the major support and resistance levels untested early on. It would need to move through the $4,305 pivot to bring the first major resistance level at $4,575 into play. Support from the broader market would be needed, however, for Ethereum to break back through to $4,300 levels. Barring an extended rally, the first major resistance level should limit the upside. In the event of a broad-based crypto rally, Ethereum could test resistance at the ATH $4,868 before any pullback. The second major resistance level sits at $4,932. Failure to move through the $4,305 pivot would bring the first major support level at $3,948 into play. Barring another extended sell-off, however, Ethereum should steer clear of sub-$3,700 levels and the second major support level at $3,679. The 23.6% fib of $3,738 should limit the downside. And now versus Bitcoin here. Bitcoin BTC to USD slid by 5.01% on December 4th. Following a 1.26% loss on December 3rd, Bitcoin ended the day at $53,687. After a mixed morning, Bitcoin rose to an early afternoon intraday high $57,599 before hitting reverse, coming up against the first major resistance level at $57,324. Bitcoin slid to a late intraday low $51,333. The extended sell-off saw Bitcoin fall through the day's major support levels and the 23.6% fib of $53,628. Finding late support, however, Bitcoin broke back through the third major support level at $53,487 and the 23.6% fib to end the day at 53,600 levels. The near-term bullish trend remained intact in spite of the latest pullback to 51,000 levels. For the bears, Bitcoin would need a sustained fall through the 62% fib of $28,814 to form a near-term bearish trend. And now let's take a look at how Solana is doing. Solana prices hugged to the top of the Cloud or Senku Span A as its primary support level for the past week. The respect of Senku Span A as support has resulted in Solana moving and closing above one of the two Ichimoku levels necessary to confirm a new uptrend. Solana price is up against its primary and final Ichimoku resistance level on the daily Ichimoku chart. The Kijun-sen within the Ichimoku system represents medium-term support and resistance and is the primary level for intraday and intra-week trading strategies within the Ichimoku system. The Kijun-sen at the $220 level is precisely where Solana finds itself pushing against. A daily close of Solana's price above $220 provides more protection from near-term downside movement than it does upside potential for a couple of reasons. First, a close above the Kijun-sen would convert the Kijun-sen from a resistance level to support. Second, because retests of breakouts from bull flags are extremely common, the combination of Kijun-sen and top of the bull flag create a double support structure. Solana price does have downside risks. The composite index is graded a high above the previous high peak on November 21st, while the candlestick chart shows the current daily high is lower than the November 21st high. This creates a condition known as hidden bearish divergence, a warning that the current drive higher may fail. It's essential that Solana price close above the November 21st open of $217, where the hidden bearish divergence may push Solana back into the bull flag and likely even lower to test the bottom of the cloud Senko Span B at $184. Before we go on to the next part of the video, like this video, smash the subscribe button and click the notification bell right now, or the dip will go back up high just as you are thinking of investing in something. Now let's take a look at why Bitcoin, Ethereum, and Solana are all plummeting today. Bitcoin, Ethereum, and Solana's respective tokens were down roughly 5.7%, 6.8%, and 8.9% over the previous 24 hours of trading as of 4:30 p.m. ET. After concerns about the impact from the coronavirus Omicron variant prompted steep valuation pullbacks for most cryptocurrencies on Black Friday, investors seem to have digested the risk. Many top cryptocurrencies had been posting strong gains across the last week of trading, but valuations are once again tumbling in today's trading session. So what does this mean? Investor appetite for risk is vacillating as we move toward the end of the year. Despite starting the week with recovery momentum on the heels of recent sell-offs, both stocks and cryptocurrencies moved lower as the week progressed, and more volatility could be in the cards. The quick recovery posted by many cryptocurrencies after last week's big Black Friday sell-off is on the verge of being short-lived. Investors seem to shrug off concerns that the Omicron variant would curb bullish momentum in the crypto space. But news of the virus's spread and the potential impact it could have on supply chains and other facets of the economy is once again pushing investors to become more risk-averse. While supply chain issues may not have an obvious connection to cryptocurrency pricing movements outside of the availability of graphics cards and other mining-related hardware, concerns about the Omicron variant may be having a less direct impact on cryptocurrency valuations. Growth-dependent tech stocks also had a bad week, with the tech-heavy Nasdaq Composite Index closing out the week down roughly 2.5%. Cryptocurrency and equity prices are typically closely correlated, but big sell-offs for stocks may be causing investors to become more risk-conscious in general and move out of crypto positions. In addition to Omicron fears, rising treasury bond yields may be prompting investors to move out of riskier investments in pursuit of safer returns. The potential for new regulatory crackdowns may also be weighing on cryptocurrency valuations. China has effectively banned cryptocurrency transactions and mining. India has recently put forward legislation that could ban all private cryptocurrencies, and the recently signed U.S. spending bill included new taxes for cryptocurrency brokers. Among these various factors, Bitcoin, Ethereum, and Solana faced a storm of bearish catalysts on Friday. And now what? While the recent pricing moves are substantial in absolute terms, the pricing swings also look fairly normal when viewed in historical context. The cryptocurrency market as a whole remains highly volatile, and even Bitcoin, Ethereum, and Solana, as well as other relatively well-established coins, are prone to posting big pricing swings on little if any news. Despite recent sell-offs, Bitcoin's, Ethereum's, and Solana's tokens have posted stellar gains in 2021. Gains for Solana's SOL token across the stretch are particularly eye-catching and have been driven by surging adoption for its blockchain network, but investors should keep in mind that the overall cryptocurrency market remains highly volatile and prone to cyclical pricing trends. Even with recent pullbacks for Bitcoin's, Ethereum's, and Solana's cryptocurrency prices, it seems clear that the overall crypto market is still in a bullish phase. Interest in digital tokens and blockchain networks for decentralized finance applications and non-fungible token or NFT development has surged this year, and the broader crypto space has seemed nearly unstoppable despite intermittent setbacks. As with stocks, predicting bullish and bearish cycles in the crypto market is incredibly hard to do with a high level of accuracy. It's possible that the current bull market in crypto still has plenty of legs, but investors should also weigh the risk that the crypto space will face more bearish pressures in the near future. For investors looking to build positions in Bitcoin, Ethereum, and Solana, making steady purchases rather than large, lump sum buys offers a way to mitigate cyclical risks. Well, there you have it. The latest news in regards to what is happening with Ethereum and the rest of the crypto coins. What do you make of this information? Let's know your thoughts down in the comment section below. If you like this video, make sure to smash the like button and subscribe to this channel. To learn more about Answerly and Answerly tokens, check out the links in the description.